Chief Market Strategist with ATFX and investingcube.com. It's a lot about the pound today. The pound is down with about 75 basis points or 92 pips as it looks like right now. So we're going to talk about that, and we're also going to talk a bit about all the other markets as we usually do every morning here at 9:30 a.m. London time. Before we start, though, it's always to stress our trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. So please bear that in mind. Please bear that in mind. Okay, good. So what's going on with the pound, right? It's down quite a bit already, right? So the number one reason for this is that we just had breaking news. I think it was up about 10 minutes ago, half an hour ago. So in essence, most likely the government is going to ask the Queen to suspend Parliament because they have time off right now, and they're supposed to go back, I think, next week, back to work. And the idea that they planned, that you probably could read about in the news yesterday, was that they're going to try to take over the debate, not take over, but sort of, there's different steps, right? But they need to sort of initiate, try to get a session where they can decide to discuss new legislation to prevent no deal Brexit, and in essence probably just get an extension, and that was supposed to happen next week. So they need to have a meeting about the meeting, and then they decide on what they're going to vote on. Now, obviously, if government suspends Parliament, then they can't meet, right? There's probably some legalities to it and things like that, where they maybe could do something about it. But the idea is that you suspend, and then because of that, there's not going to be time to discuss any sort of and then vote, more importantly, on legislation to prevent no deal Brexit. And that is why the pound is declining the way it is. So as you know, over the last few hours, there we go. Sorry about that. So as you know, over the last few hours, the market here has been over the last few days, really, we were dealing with this inverse head and shoulders, and we were going upwards. So the first part went up rather good, went as high as 123.13, and now the market was just trading here about 8:30, then slid down a bit more just in the last 37 minutes or so. On the back of those news. So obviously when you get news like that, you don't have to go long immediately. My idea, what I was looking at this morning, is that the market might actually bounce from something like 120 to 20. But obviously when you have news like that where they're going to suspend Parliament, they're going to try to suspend Parliament, it's something that, of course, that should something that will obviously cause the pound to weaken, right? It's not that's not like a big surprise. So the market here, I think, literally sort of touched with 121.78, which was the level I picked. The actual levels that I was watching was these levels here, okay? So these was the actual levels I think made sense to work with. But I don't never want to put a stop loss just below the low, so just push slightly below. Now, obviously, we're looking at this right now, and again, we haven't properly breached that level. I think we could probably go a little bit lower, and then probably up. So if it goes down and up, I think it's time to sort of start to position ourselves for bearish. Alternatively, it does not properly break that level and it just goes up and down and then up. And what I would suggest here is actually just to wait a bit. Here, there's not like a clear trade here, because we're going from being in an uptrend to going into directly bearish. Of course, maybe I'm underestimating the panic that people will have following like the likelihood of no deal Brexit, and maybe this is it. Maybe it's a golden opportunity to short sell. Well, in general, I think, yes, I've been sharing with you guys in the past. Let's see if I can load a few charts for you. So I'm working actually on the Q4 report. So this is the what you're looking at here is just a monthly chart I prepared. It's going to be in the Q4 report. This is a monthly chart. So you have massive head left, and right shoulder, so head and shoulders pattern. On this monthly, this is low from from the year 2000, 2001, and this is another low here from 2009, 2008. And you had the break here on the referendum where the UK decided to leave the EU. You got that sell-off, and then you had that corrective move, and then you got that pushback again. So the head and shoulders itself suggests we can trade down to 62, 61, which is actually the same levels where the New Zealand dollar is trading right now, more or less. The New Zealand dollar trading at 63 dollars cents. So I think we can go lower, and this is the 2016 low. So this is 2016 low, and if we take out that 2016 low, the next level is the 105, which is the 1985 low, which again would not be unsurprising. Then you have obviously slightly shorter term setups, and this was my original idea, and I've been sharing that with you guys as well. And here you have funny looking like a double bottom, one low, two low. And my idea in general here was that when the market goes up, as you know, from 123, 124.50 or something like that, I thought people were going to sell here, and then they're going to target these lows. And the shorter term, this double bottom rectangle like pattern gives you a target of 116.31. So this is sort of falling in line with that. It's just that it's going far more quicker. And we're going to get more news here. Like even the experts like Laura Kusenberg from the BBC here sort of tries to explain the situation, but it's not really clear exactly what will happen. But if they go ahead with the Queen's speech, then again, there's not going to be time. In fact, even if this is something like Faisal Islam says really good, like even if sort of EU and Ireland would completely cave and drop the backstop, he says, will there be enough time to pass a new withdrawal agreement bill? So in essence, they're literally locking things in here for having a no-deal Brexit on October 31st. We'll see what happens. The opposition got organized, but like in the final hour, and things like this happen. Yes, it looks like we're gonna have a no-deal Brexit, and then again we have the break here to the downside, and then again I think if we sort of stabilize here, we close around these levels, so lower, maybe at 120.54. Then again, I think any sort of corrective moves are probably going to try to be short sold, but they could be better. Like I think I did an update on your GBP recently. Yeah, here we go. This is actually far better, I think. This is your GBP. All right. So in this pair here, you can see that we're dealing with an overall bullish trend, right? Since 2015, and even before that, really. Sorry, yeah, this is the EU referendum vote here. So we went up here, and the pound never really gained any traction here against the euro. It remained at these elevated levels, and you can see here at least that in the very short term you have a low here, and the market's in an uptrend, and we had a break, and what we're dealing with here is the market trying to bottom out. So here your risk reward ratio is far better, I think, than well, actually we can just measure it, right? Well, to begin with, we're dealing with an uptrend, right? We're just dealing with a few days of correction. So maybe we would buy current levels, and this is the setup, by the way, I shared. Technically we should actually be able to sort of just say that as long as we trade above this low here, we should be fine. So his idea is that we're never really going to revisit these levels. So if we go up here, you're looking at 2.43 times risk reward ratio, and if we flip to a daily chart and reach higher levels, then you're looking at a 4.11 times risk reward ratio. The biggest challenge I have with GBPUSD is that this is, I guess, see if we can flip it. Sometimes if you flip things, might look better on the eye. So this is GBPUSD, but just the inverse. Now I would argue here that the challenge with this one, if you see here, is that we can still actually correct more. I'm not saying it will correct more, but we can still correct more lower before heading higher. Like it would be different if the move originated from lower levels, like here, which it is actually doing here in GBPUSD. It's originating from lower levels. We're closer to important support as this market is bottoming out. So this is definitely something to keep an eye on, and maybe pull back or getting involved here. It also depends on your outlook. Remember, we're dealing with the pounds. The pound in general is sort of very, very difficult to deal with. It is prone to give you false moves. Now, let's take a look at the EUR/USD. So EUR/USD is not really moved too much, and the general idea here is that we're gonna trade lower. I think there are several factors. We got Brexit coming up on October 31st. We have negative interest rates in Europe, which is much more negative here in Europe than they are in the US. To give you an idea, the interest rates in Europe are going to be lowered. The ECB rate is probably going to be lowered to a negative 60 basis points, whereas in the US it's closer to what is it, 2.25 or something like that, 2%. You got the US 10-year government bond yield, which is a 1.5% in the US, and the German one is a negative 63. So 69. So you can see that there's even though the cutting interest rates in the US, there's still some positive return there. And then you have as well the ECB that is actually, because interest rates are so low in the Eurozone, if anything, they're going to try to relaunch quantitative easing, right? Whereas in the US, there's no talk about adding quantitative easing now. It's just about reducing the tapering of their balance sheet. So I think from that perspective, it makes sense why we're going down lower here. And another thing is that Christine Lagarde, which used to be at the IMF and used to work in the French government before that, and a bunch of few sort of been in important roles before. She's going to become the new head of the ECB. Now she is considered to be more dovish than Mario Draghi. And then again, another reason to be overall bearish in the EUR/USD. And the market is going down. It's just going down very, very slowly. And obviously now with the situation with Brexit and the pound, we might probably continue to trade a little bit lower, maybe reach 110, maybe a little bit lower. But I think here to trade this well, I think we still need to wait for that corrective move. So when we're trading up here, we said probably gonna go lower, which actually did, and that's what I prefer doing. Now here's the dollar versus the Japanese yen. Now the dollar versus the Japanese yen, is driven, of course, on other things, but the situation with Brexit is not going to help Europe or the UK, and Germany and UK is already contracting economically. It's probably going to do that even more now. So I think with the bad data from the US, trade wars just never ending on escalating, I think we'll be trading down here in the next few days, hopefully. Remember, we're trading up here, so we're probably going to go down. I think that's going to happen again. I think realistically, at one point, we're going to trade below 104.56, and the market's going to try to seek its 2016 low at 100. So that's where I think we're going to be at. Unless, of course, we have some concrete concrete development where they de-escalate trade war, so they have some deal, but it looks like they're not even, it doesn't look good at all over there with that. Crude oil prices. So crude oil prices are up a bit. This is West Texas crude oil, and there's not much to say here. The market is just trading sideways, so they need to wait for a break to the June low or the break to the July 31st high. And I think relatively soon, I think I'm actually gonna lower. I have a suspicion, or I think we could probably relatively soon lower it here. So you see what I'm doing. When we were trading up here, I think I said it's gonna narrow down, and I'm gonna lower and lower the levels, and that's exactly what we're doing now. This market has gone nowhere, and unless you traded, bought here and sold here, and which was very difficult to predict in the beginning. Not much has happened here, really. This is Brent crude. Brent crude remains bearish. When the market traded lower here in August, in the beginning of August, I said probably people are going to sell it here, which they did. We went down, and then we went up, and then went down. So we haven't really made any progress here either. And here, I think as long as you trade below 62.92, this is going to be a downtrend. And I think up here, people are probably going to try to sell again. As for gold prices, they remain strong. And the last setup I shared with you guys was the buy down here, stop here. And I'm going to stick with the same view here. Risk reward ratio is to be buying at 14, 15, 14. 09. I might be totally wrong, and this thing is just gonna sort of rally significantly higher, which wouldn't surprise me given the situation in the world. But as always, it's really important to have those risk reward ratios in place. So if we have a corrective move to 14 or 15, 14, I think that's what people really want to be buying. German DAX moving down lower. I mean, this is not unsurprising. You know, given the business between UK and Germany, so should probably continue to trade lower. If we trade down to 11,500, that would not surprise me. I think what you can focus on here as well is you get the August 8th high. Take that out. You know, the market might actually turn bullish. You have a head and shoulders with the left, right shoulder and a head. Finally, this is your German DAX, the S&P. The S&P is just trading within a range. You got yourself like a triple light bottom, 1, 2, 3, 4 highs at the top. And it's really a matter of sort of, we're dealing with an uptrend, right? It's bullish about 28.04, and people probably going to be buying down here. And if you're bullish, that's what you want to be working with. If you think that trade wars and things like that are going to cause more damage, then you wouldn't be buying here. You would be selling. So when we're trading down here, I see people probably going to sell up here. We didn't really reach those levels, fortunately, but you would, in essence, try to sell up here, maybe here potentially. So later go up to 29, 25 or something like that, and then maybe short selling stops up here, I guess, to sort of risk that, and then see the market go down lower. The other options, of course, you know, this is something which is the Dalian, which is at least right now offering a better risk reward ratio, I think, than shorting stocks. And there are other stock market indices as well. If we just look around, you'll see that there are other stock market indices which you can work with. Okay, let's see if you guys have any questions. So we have Mark here. Good morning to you, sir. Hope you're doing well. And we have Leandro. Good morning to you, sir. And Ronnie Giles. How are you doing? Well, I hope you're well. I hope the weather's good up in Scotland. And we have Nikos from Greece, and we have Marvin as well. Good morning, guys. I hope you guys doing well. Thanks so much for joining me. It's always nice to see you guys here in the chat. So if you have any questions, you can just put them in the chat box. If you don't, which is fine, then don't forget to like the video. You know how it works. It's just down here. And if you're watching recording, don't forget as well to like the video. Yeah, same. I think Leandro, are you the same Leandro I met in Madrid? It should be you. I don't know so many Leandros, but I think it's you. If it is, then it's nice to meet you again. I've seen some of your tweets as well. Okay, good, awesome. All right, nice to meet you again. So I met Leandro here. I was in Madrid with ATFX a few months ago, and it was like a Forex expo, and I was there talking markets, and I met Leandro. Leandro has been trading for many years. Okay, so it looks like we don't have any question, which is perfectly fine. By the way, if you guys have arrived just yet, right now, don't forget you can always push things back like that, and then you can just put the question in, and then I'll see it and I'll answer it. But if I don't see it, then sometimes what happens is that people put the question on very late, but then we actually already finished the recording. Okay, let's see what happens here in the market. It's not looking too great for the pound. Let's see. You know, the market is probably gonna be a bit weird, as it usually is. Some of the risks here is that the speaker, I'm not an expert on UK law, by the way. This is a bit complicated, all of this, I think, many times. And again, not even the experts know fully what's going on. But what's interesting in general is just that there might be something somewhere where they could block things as I understand it. Now, of course, because this is a reality, you'll probably read more about it on the BBC. What they can do and can't do. If I'm gonna give my 2 cents, I mean, I think the opposition got organized, but I got organized very, very, very late. And we'll see what happens. But I think most people are not fully prepared for a no deal Brexit. I think that's sort of in their minds. And as I talked about before, probably the exchange rate is going to take the biggest hit, which makes sense. The currency goes down, and then suddenly, visiting London is cheaper, so tourism does well. Buying UK products becomes cheaper as well. The only issue, though, is the same time that a lot of the imports that, simple foodstuffs that we import from the UK become more expensive. From the Europe becomes more expensive. So this is gonna be maybe it's gonna be the economy is gonna rebalance, and it all sort of depends on how quickly it rebalances. Fortunately, traditionally, it takes a bit of time, a few years to maybe 2 years or something like that. I would argue to people to find new jobs if they lose one, or get a new education, and sort of so to move itself from what right now is productive to maybe what could be unproductive following Brexit. Anyway, we're gonna see what happens. I think we'll be fine, but obviously the market is gonna be volatile. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow, same time here at the ATFX YouTube channel. Don't forget to subscribe if you're not doing that already, and as well here on investingcube.com. Have a great day, and thanks so much for watching. Thank you.